In this video, I'm going to explain to you Google, or rather Alphabet, Google's parent company's annual accounts. What do they mean? What do they tell us about Google? Are they aligned in any way to how Profit First works? And a couple of little things that I spotted that I think you'll find interesting. So I'm going to share my screen and we'll dive in. Is Google's profit and loss account, or statement of income as it is sometimes called, often referred to statement of income in the US particularly. It's important as we're looking at this to remember, of course, that these are in US dollars and all the amounts you're looking at are in millions. So for example, this revenue for 2020, 182,527, that is million. So it's important to remember that when we're looking at it as well. So the first thing to know is the increase in revenue from 19 to 20. That's a revenue increase of about 12.7% there for Google, or Alphabet Inc., as it is called, in this year. And remember, of course, it was a COVID year. 2020 is, if you're watching this a few years from now, is the year that most of the world was severely impacted by COVID. Google, or Alphabet rather, posting a 12.7% revenue increase over this time. Now, if we whiz down to the very bottom here, this net income, that is basically their net profit number. That is their profit after tax number that we see here. That is what that means. So you can see in the year 2020, it's 40,269 million. That the profit has been, and that is an increase in profit of just under 17%. What we also want to look at, and what I always check, is the profit as a percentage of revenue. That's something that's good to review because, of course, if you're looking from a profit first perspective with a profit first hat on, that is something that we do look at with that. And the profit percentage of revenue is 22% for 2020 and slightly lower at 21.2% for 2019. So revenues are up, profit is up, and profit as a percentage of revenue is up as well, which means there must have been some efficiencies gained there within the business, or reductions of costs, in order to get that profit percentage increasing as a percentage of revenue. So that's the first interesting thing to note there. The next one is this provision for income tax. We know that, of course, some of the big boys get a lot of bad press for lack of payment of taxes and all those things. But we can see here that, of course, they are providing for income taxes at around between just short of 8 million for 2020 and just over 5 million for 2019. That works out, by the way, in 2020 as a percentage of profit at around 19% and at around 15% as a percentage of profit in 2019. Now, that is typically the kind of level we would expect for any entity. If you think about what the corporation tax rates, or business income tax rates, depending on what you call them, are worldwide, then them paying 19.5% of their profits in tax, that is pretty reasonable. So that is not anything that we would be surprised at. That is not a crazy, ridiculously low level of taxes by any means. It is actually pretty standard overall. So that's an interesting point to know as well, that we expect that type of level when we look at it. But when we actually compare it to revenue, this is an interesting thing, because when we compare the tax provision to revenue, it's around 4% of revenue that they are paying in tax. And that overall feels lower because we know under Profit First that the provision that we estimate for tax is about 15% of revenue. So what this says to me is that although the taxes versus a profit is roughly where we'd expect it to be, actually there is some overspending and wastage in this P&L. There are actually some money leaks overall when we look at it, when we compare it to how we would run a business under Profit First. And that I find incredibly interesting. And you might see in a little minute one of the big ones that I have spotted in here. So I will highlight that big money leak to you shortly. But next we're going to have a look at another interesting side of it, which is the balance sheet. The balance sheet shows that Google or Alphabet has increased their debt quite substantially in 2020. So if you look at this long-term debt line, you can see that the long-term debt has gone from about 4.5 million to just under 14 million in 2020. That's an increase of over 200% debt that this business has acquired over a 12-month period. Now, that might not be surprising with various governments across the world, particularly in the US and the UK, giving out debt payments during COVID. But this is quite surprising to me for a business that is this size, that is continuing to increase revenue, that they've taken on such large amounts of debt. Because the interesting part is that when we look at their cash holding is not increased by a similar amount. Their cash holding has increased. It's increased by 43%, but not close to the increase in debt. Now, my initial thought when I saw the increase in debt was, well, maybe they're wanting to hold cash at this point in time. We know about recessions, inflation, etc., but actually they've not pumped it into holding cash, which has been very interesting. Now, they have put some of that into, by the looks of it, into acquiring more property, for example. Property and equipment, you can see, has gone up here. So there is some investment happening as a result of that. But this is an interesting move for Google here as well. Now, what else we look at when we look at a business's balance sheet is we look at what is called the shareholders funds, or it may also be called the total assets figure as well. This is the number that is shown in the balance sheet in two places. It's shown in total assets and it's shown here in the shareholders funds amount. And with this, we want to see, for a healthy business, an increasing trend in this number year on year. And we can see that in Google. We can see that there is an increase in that. So when we're looking at that, we can see that it is still a healthy business despite everything I've just said. But the thing I want to show you, which I find really fascinating and is a big money leak for this business, is European Commission fines. So you can see here that this business in 2020 is accruing for nearly £10.5 million worth of European Commission fines and nearly £9.5 million in 2019. Now, as a percentage of the business's revenue, that adds up to 5.7 and 5.8% of revenue in each respective year. So I ask you, if you had a business that you were ending up paying 5 to 6% in fines every year, you probably wouldn't be very happy. You would probably, definitely, in fact, deem that to be a significant money leak in your business that needed plugged. You'd probably be pretty annoyed that those fines were happening. So this is so interesting to me that Google or Alphabet are incurring this type of level of fine in their business. Over 5% of their revenue is going back out in fines to the European Commission. So I find that completely fascinating. So I hope this has been interesting in terms of looking at a big business's key numbers and understanding what I look at when I look at a balance sheet and profit and loss account, the things that I pick up on and the things that I delve into. I'm going to be doing a series of these videos, so if you have any businesses that you want me to review their accounts, then let me know in the comments and I will absolutely do that. If you enjoy what I share on this channel, I would love if you want to come and subscribe. Make sure you turn on the bell so that you know next time a video is live. Make sure you do give us some thumbs up, give us some hearts, and I will see you next time.